Good morning and welcome back to Almus Market Mornings. There is no relief for energy prices. That's the current reality of the war in the Middle East. And this comes despite IEA announcing the release of 400 million barrels of oil from its emergency oil reserves, which, by the way, is the largest release ever. Just for context, after the Russia-Ukraine war started in 2022, the IEA member states released a cumulative of 183 million barrels of oil, and that just tells you how important the Strait of Hormuz is for oil. The bottom line is that despite the military might of the US and the Israel, as long as Iran is able to maintain a perception of fear, vessels will not pass through Hormuz, and that chokes the world economy. Good morning, JK. I think during these times, we really need to borrow from your bank of wisdom. What's your take on the current set of updates?
Good morning, Swaraj. I think we are definitely going to be in a tough situation for much longer. It's the Iranians, while Trump claims that there is nothing left in Iran to destroy. Iran is actually holding all the aces as far as the oil supply is concerned, and the by effectively not allowing any ships to pass through the Hormuz Strait. They have cut off 20% of the oil to the world, and seeing that the prices are risen once again closer to 100 now. So, world is going to have a tough time. I mean, particularly the oil importing countries, major economies, India, China, Japan, and even Europe, because of the natural gas on which they depend a lot. Uh, so this release is not definitely not going to be of help, considering that the war may continue for another month or so, as per many experts. So we should be prepared for even higher oil prices going forward. In fact, day before yesterday, there were a rumored sale of oil futures by the Treasury just to contain the oil prices, but when it went down, and it has retraced all the way back up now towards $95 in Brent. So that's the kind of pressure that the oil prices are facing right now. Now, you see, this decision is going to be a temporary measure, and we are definitely going to, have much more difficulty if the war continues. Now, the Iran military command also has said that they will, our world should be prepared for oil to hit $200 a barrel as they continue to attack all the ships. Now, while that may or may not come, but it definitely creates a sense of anxiety among the global economies, and it cannot be totally ignored as well. And in fact, on the war front, we have seen Lebanon has carried out missile attacks on Israel, and it's the first coordinated attack with Iran that is done. So it means the war, the attack from the Iranian side is also expanding. Iranian president says that the end to war is only by recognizing Iran's legitimate rights, payment of reparations, and firm international guarantees against future aggression. They're actually increasing their negotiating power, and by stretching the tolerance limit of the US as well as the global economy. So their strategy is very clear: inflict maximum pain so that they are able to get negotiations at a better terms. So until that happens, this difficulty will continue. In fact, there are intelligence reports that say that the regime in Iran is not in danger, while there has been assumption that there has been internal strife and protests. That is only against the regime and not against the country. When the country is in attack, I think there is a lot of unity, and that is what is uniting them to fight. So I think it's a long run fight for the world economically, and for Israel and Iran, obviously, it is a battle of arms. Now, on the economic side, we had a CPI report from US, which came exactly as expected, 2.5% on the year on year. And well, it is well below just 0.5% above the Fed target of 2%. But then this is quite irrelevant at the moment because uh, world is dealing with other issues. And secondly, this CPI number is definitely bound to go much higher, in the coming months as oil prices have risen, and is likely to stay for much longer. And there is also an expectation that even if there is a negotiation and there is some sort of a cessation in the attacks, mutual attacks, oil price will still carry a risk premium, geopolitical risk premium of about $15 to $20. That means forget about the $60 that we have been used to for quite some time now. Oil should be settling somewhere between 75 and 85 for quite some time to come. That itself is enough to put stress on many of the oil importing countries. So even if the supply side is eased, the prices are going to hurt the economies, is going to result in in higher inflation, and rate hikes and not rate cuts will be the order of the day for some time to come. I think the next week we are having a host of central banks, almost 8 central banks are meeting, and at least one or two of them are definitely going to raise rate, including the Australian Central Bank. So be prepared for the monetary tightening and higher inflation. And the longer this continues, you have hit on the consumption and growth as well. Now, not while this, I mean, as if this was not enough, even the Trump administration has announced a new trade investigations against China, Mexico, and European Union, and including many other countries also, with the goal of replacing President Trump's reciprocal tariff, which was recently ruled illegal by the Supreme Court. And according to the U.S. trade representative, the probe, will expand to more nations. And Scott Bessent has actually predicted that tariffs would return to the levels that existed before Supreme Court's ruling. So this is one, risk that is right now in the background, but that cannot be totally ignored as well. Now, for India, the action in the rupee looks similar to what we saw at 91. Heavy buying by the market participants, while state-run banks are continuing to offer. But with situation in Middle East having potential to deeply impact the Indian economy, it's a matter of time. We should see the rupee slipping further unless we see some easing of tensions, and more particularly free flow of oil is restored. It looks like this will take much more time. On the stock market side, the Sensex is now entered the correction territory, having fallen more than 10%. I mean, it's in the market parlance, fall beyond 10%. Lead and up to 20%, it is in a correction territory, and when it falls more than 20%, actually it is in a bear territory. So that's not giving a good feeling to the market. And we are also seeing many macro analysts downgrading India's GDP growth rate as well. Now, so I think the dollar index is also rising. Now it is closer to 99.50 once again. Touching of 100 is quite likely if these tensions continue. Now, finally, behind the scenes, there is the resentment growing in the Gulf countries as well, being drawn into the war that they never initiated or endorsed, but they're now having to pay very heavy economic and economic price for the attacks on their airports, military, and other civil places. And there is a opinion that says they were quite likely to review how their security situation is failed. Although that is the reason why US had set up their bases. So there is some going forward in the medium term. There is likely realignment of the geopolitical relations as well. So that's something that the market will be not contending right now, but I think a huge reset of global relations in the medium term is what we should look for. But currently, we are dealing with huge disruption to the global economy, and particularly for our economy as well. While government is taking definitely strong measures to ensure that supply is kept as much as possible, but there is a limitation if the war continues for much longer. Thank you.
Thank you, JK. And yep, geopolitics again, it's the driving force. Despite IEA announcing the release of the SPRs, the IEA member states, oil is once again back above $100. So it just sort of tells you that the kind of oil that passes through Hormuz and even the IEA's SPR release may not be sufficient if this particular geopolitical event just continues. So it will put a real strain on the world economy, and that seems to be the cards Iran is holding just by having that keeping that fear alive, not blocking that Hormuz Strait completely. It has the upper cards in this geopolitical tussle between one of the largest and the strongest militaries in the world. So despite having that, there is a geographical advantage which Iran is having. Apart from that, of course, all of this domestically, it's putting pressure on the rupee. Higher oil prices not good for us, and that's keeping a lot of pressure for rupee to weaken further. Adding to that is equities getting a good beating, and that may also keep FIIs on the outside and further impact the rupee. Dollar index, interestingly, is back at 99.5, and it may hit 100 if the tensions continue. That's it from us today. Thanks for listening. We will catch up tomorrow, the fresh round of updates.